Now on BBC News, the latest from New York and around the world. Business Today.
Live from New York at the opening bell, this is Business Today. AI bubble? What AI bubble? Nvidia's bumper earnings send global stocks skywards. Still hiring. September's delayed jobs report shows a surprise rebound while unemployment edges up. Plus, shopping around, Walmart reports stronger than expected sales and raises its outlook as consumers seek out deals. And analog nostalgia in a digital age, why vintage gadgets, from typewriters to old computers to mobile phones, are becoming increasingly collectible. Welcome to Business Today, live from New York. I'm Michelle Flaring. We start here on Wall Street, where markets are off to a very strong start. The Dow Jones up already 1%, the S&P 500 1.5% higher here. All of this is from the company at the heart of the AI revolution, chip giant Nvidia, which has once again blown away expectations with a bumper crop of results. Results so important, they are seemingly single-handedly driving up stock markets, not just here, but around the world, as fears of an AI bubble seem to have been tempered, at least for now. Meanwhile, back in the real economy, we've also just had US jobs numbers for September delayed due to the shutdown, showing the biggest job gains in 5 months, adding a better-than-expected 119,000 jobs, while unemployment ticked up from 4.3 to 4.4%. Mike Muscio is president at FBB Capital Partners and joins us now. Mike, good to see you this morning. This is the last official word on the jobs market before the Federal Reserve's next rate-setting meeting. Does this increase or decrease the odds of a rate cut in December?
Good to be with you, Michelle. Yeah, on the whole, I would say it probably decreases odds, and sure enough, probabilities this morning look like they were down about 42% in terms of an easing move in December. Investors will recall from a comparative standpoint that just a month ago those probabilities were 95% for a cut in December. So we didn't get a lot of government news during the shutdown. There was a good amount of Fed speak during that period of time, and the Fed governors, a lot of them are talking about no slam dunk in terms of a cut in December. And the data here seems to be giving them room to do that. The jobs number, the 119 number for September, that doesn't sound like a big number based on some that we've had over the past several years. But over the previous 3 or 4 months, that number had averaged around 27,000. So that was almost, that was more than 4x what the 3-4 month average had been through September. So that was very positive. Yes.
Yeah, Mike, just briefly, I mean, obviously good news there on the jobs front then. What do you think is driving this very strong market open we're seeing right now? Is it data from the real economy? Is it Walmart's results? Or is it sort of just relief about Nvidia and the AI sector?
Yeah, I think the Walmart results in retail was very positive, and I think that complemented with Nvidia. I feel like everybody was kind of waiting to exhale based on some market downside volatility over the last week to see that number, and it was a very, very big number, and it was very, very positive commentary from the CEO. So I think it's both of those things.
Mike Muscio, president at FBB Capital Partners, thank you so much for joining us this morning.
Okay, thank you.
More now on those Nvidia results, whose chips, as we've been saying, is at the heart of the AI boom, and the firm has been selling them faster than anyone predicted in the last quarter. Let's take a quick look at the number. Nvidia made revenues of around $57 billion in the 3 months to the end of October. That was up 62% on the same time last year. And CEO Jensen Huang predicted even higher revenues in the current quarter, saying from their vantage point there was no sign of the AI boom coming to an end. Well, joining me now is former Wall Street banker to the tech industry, now independent strategy advisor, Jay Goldberg, founder of D2D Advisory. Jay, Jensen Huang there rejecting any idea of an AI bubble. Do you agree?
I think we're in a bubble, plain and simple. Right? If you look at the markets, if you look at the end markets, the amount that's being invested and the way in which people are raising money to fund that investment, it looks a lot like a bubble to me.
So then if you look at Nvidia specifically, it reported record high revenues from data centers. That's the big hyperscalers, these big companies like Amazon, Microsoft, Meta, building out massively their infrastructure for AI. How sustainable do you think that strength is?
That's the ultimate question here, is how sustainable is it? And I think one of the interesting things about this bubble is the narrow base of it. Right? There's really only 6 companies that are driving all of this demand. And if you push them on their reasons for investing this heavily, they can't really come up with a good business case for doing that. Another function of this market is these so-called neoclouds, the sort of aspiring cloud service providers, companies like CoreWeave and Nebius and Lambda that are coming up, and they are large NVIDIA customers, and to a growing degree, NVIDIA is sort of helping them, almost subsidizing their demand to some degree. And I think that's the big question I have about NVIDIA's bull case here is how strong really is that end demand? How sustainable is it?
I mean, that's a question certainly investors are asking more and more. What do you think could derail that going forward? I mean, we've got, Nvidia saying, look, for now, our order books for the months going forward are kind of full. Is it regulations, or do you think it's companies investing less?
I think next year we're going to start seeing constraints on the electrical grid in the United States. That's going to slow down some projects. That's certainly a factor. But then I think there's a broader question of how much of how companies are going to raise the funds to support this demand. Certainly, big companies like Google and Amazon, they have free cash flow that they can support. But increasingly, we're seeing those companies turn to the debt markets, which is always a dicey proposition. And then there's a large swath of customers whose funding is, let's call it aspirational, right? OpenAI in particular is really the sort of the flagship of all this. They're leading a lot of this. And as impressive technically as the company is, they're still technically a startup. They're losing money every year, lots of it. And they've gone out and said they're gonna purchase $1 trillion worth of compute over the next 5 years. And nobody has any idea where they're going to get the funding for that. So I do have questions about long-term viability of the funding.
Right. Jay Golbo, founder of D2D Advisory, thank you so much for joining us this morning.
Thank you.
OK, so as we've been hearing, big tech is storming ahead. But what is the reality like in the real economy? Well, one big hot-button issue in recent regional elections has been the rising cost of living, squeezing people's ability to spend. But results just out from the retail giant Walmart seem to show this might not be as bad as some feared. Walmart reported stronger than expected sales for the August to October period, with revenues up nearly 6% compared to last year, and raised its outlook with the key holiday shopping season ahead. For more on this, I'm joined now by Heather Herzog, a retail analyst and author. Heather, thank you so much for joining us today. What did you take away from Walmart's results?
This is a really interesting quarter because the first news is that the e-commerce business has gone up like gangbusters. It's up about 28%. And part of the reason why, they really did something extremely interesting, which is they mixed their product basket assortment. So the AUR on things like toys and electronics, that went up, that price increase went up there, but they were able to keep food and non-discretionary items at quite lower of a price. So when you see it, when you put it in the juxtaposition of the K-shaped economy, right? When you see the higher earners, they're the ones that are driving this margin expansion, right? Huge e-commerce sales, huge membership increase, almost about 17%. Expedited delivery went up 70%. That upper part of the economy, those spenders are the one that's driving that. Meanwhile, on the lower part, they're the ones that are a little bit more price sensitive, but they were able to afford those discretionary items, non-discretionary items.
So does this mean that higher end customers, the more affluent, are basically masking an underlying weakness from customers that have to watch their wallet more?
I wouldn't say that it's undermining it or masking it, but we did see Walmart, which, I mean, they did something very interesting here. They knew that the price sensitive consumer, their core customer, they needed to keep those prices down for those non-discretionary items. But those ones in the upper echelons of spending, right, the big spenders, they aren't so price sensitive. So they just mix the prices around so that you had that margin expansion, but you were able to not eliminate or to get rid of those customers that needed to be saving.
So I mean, it sounds like it's all good news at the moment for Walmart, and they've kind of managed the market correctly. Why do you think their results are so different from, say, Target?
There's a couple of reasons. So, like I said, we had that inventory, that basket mix, right? But they also had a really strong control on their inventory management. When you have strong inventory management, that also contributes to the fact that that margin expansion was there. Also, they put a lot of investment, as you know, they have that partnership with OpenAI. They're looking at now 3 different ways to purchase Walmart items. So you have brick and mortar, you have e-commerce, and now you have this ability to shop Walmart via ChatGPT/OpenAI. So they really are expanding their, their omni-channel,
Right,
as it is, so that they can acquire more customers. And I think that investment is really paying off.
So zeroing in on every customer. Heather Herzog, retail analyst and author, thank you so much for joining us.
Thanks for having me.
Now to a dose of nostalgia, because in today's increasingly digital world, there is a growing interest in items from a simpler analog age. Think record players, typewriters and film cameras, but also old computers, early digital watches and some of the early mobile phones. They're all fetching good money online and at auction. That's according to one auctioneer who's been telling us about the appeal of yesterday's gadgets.
So it's a trend we're seeing across all sorts of collectibles, as you mentioned. We're seeing people want to collect vinyl records. People are even turning back to VHS tapes because we're in this age, this digital age, and we don't get the same sort of feeling from tapping on our smartphone as we do as the click-clack of a typewriter and all these fantastic old things. Your bog standard typewriter isn't going to make a great deal of money, but there are some really interesting, quirky curiosities, alternate layouts of keyboards, and unusual models. We sold one last year for £29,000 because it's just an unusual model, and it gives you a glimpse of an alternate reality where we'd never had the QWERTY keyboard and we have these bizarre layouts, and it's this intersection between collectors who love tech, collectors who love design, and collectors who love scientific instruments. So although it sounds quite niche, there's quite a broad collecting market for that kind of thing.
And that's it from Business Today. Thanks for watching. Bye-bye.